I'm going to tell you something that's going to sound ridiculous, but stick with me, because this might completely change how you think about trading. Your grandma would probably be a better trader than you. Not maybe, not possibly, probably. And I'm not joking. She doesn't know what a MACD is. She's never heard of Fibonacci retracements. She couldn't tell you the difference between a bull flag and a bearish engulfing pattern. She probably thinks a trend line is something at the grocery store. But she would absolutely destroy most retail traders. And here's the uncomfortable part. Not because she'd do anything sophisticated, because she'd do the exact opposite of what you're doing right now. Think about this. Your grandma buys stocks the way she buys anything else. She finds something she likes, she buys it, she holds it. She doesn't check the price 47 times a day. She doesn't panic when it goes down 3%. She doesn't sell it because some guy on Twitter said the market's going to crash. She just holds it. For years, decades even. And that simple, boring, unsophisticated approach beats the living hell out of what most traders do. Because while you're stressing over 5-minute charts, moving your stops, revenge trading, overanalyzing every tick, and generally making yourself miserable, she's making money by literally doing nothing. Here's what's actually happening. You're sabotaging yourself with intelligence. You know too much. You think too much. You do too much. And all that knowledge, all that analysis, all that activity, it's making you worse, not gooder. Your grandma doesn't have this problem. She doesn't know enough to sabotage herself. She can't overthink because she doesn't understand what there is to think about. She can't get fancy because she doesn't know any fancy strategies. So she does the one thing that actually works. She buys good stuff and holds it. And I know what you're thinking right now. But I'm a trader, not an investor. I'm trying to make money faster than buy and hold. I'm trying to actually beat the market. Great. How's that working out for you? Be honest. Not your best week, not that 1 month where everything clicked. Your actual, total, overall results. Are you beating buy and hold? Are you even beating cash? Because here's the brutal truth that most traders never want to face. The vast majority of active traders would have made more money if they just bought an index fund and did absolutely nothing. All that time, all that stress, all those charts, and they'd be richer if they just bought and forgot. Your grandma figured this out without trying. She doesn't know she's following the best strategy. She just is, because she's simple. And in trading, simple beats complex almost every single time. In this video, I'm going to break down exactly why your overthinking is destroying your trading, why the smartest people often make the worst traders, why your grandma's clueless approach actually contains more wisdom than most trading courses, and how you can take the principles she's accidentally using and apply them to active trading without having to wait decades for results. I'm going to show you real data on how simple, stupid simple strategies outperform complex ones, how doing less beats doing more, how not knowing protects you from the mistakes that knowledge creates, and why the traders making real money look a lot more like your grandma than they look like the technical analysis wizards on YouTube. You'll see exactly where your intelligence is sabotaging you, the specific ways your knowledge is working against you, the moments where thinking more makes you trade worse, and the framework for stripping away all the complexity that's keeping you stuck. Because here's what this is really about. You've been convinced that trading success comes from knowing more, doing more, analyzing more, being more sophisticated, and that belief is killing your results. The real edge isn't in complexity, it's in simplicity. It's in doing the boring, obvious thing consistently without getting cute. Your grandma knows this instinctively. She doesn't try to optimize, she doesn't try to be clever, she just does the simple thing and lets time do the work. And if you can learn to trade with even a fraction of her simplicity, your results will transform. By the end of this video, you're going to understand why less knowledge can produce better results, why the dumbest looking approach often wins, why your grandma's ignorance is actually a massive advantage, and how you can take the principles she's accidentally using and trade like her. Because the uncomfortable truth is this: you're probably smart enough to be a great trader. You're just too smart to let yourself trade simply. And until you fix that, until you can embrace the boring simplicity that actually works, you're going to keep struggling while your grandma accidentally gets richer than you. Let's get into it. Let's start with why smart people struggle with trading, because this is counterintuitive. You'd think intelligence would be an advantage. More brain power, better analysis, faster pattern recognition should be a slam dunk, right? Wrong. Intelligence in trading is often a liability. Here's why. Smart people overthink. They see complexity where none exists. They build elaborate theories to explain simple phenomena. They can't accept that the answer might just be buy good stuff and hold it. Your brain is a pattern recognition machine. It's designed to find connections, build models, predict outcomes. That's great for most things, but in trading, it's a curse. Because markets are mostly random noise with occasional signal, but your smart brain can't accept that. It needs everything to mean something. It needs every move to have a reason. So you start seeing patterns that aren't there. You build complex systems to explain randomness. You convince yourself you've found an edge when you've just found variance. Your intelligence tricks you into believing you can predict the unpredictable. Your grandma doesn't have this problem. She doesn't try to predict anything. She doesn't need to understand why the stock went up or down today. She just knows it's a good company, and over time, good companies go up. That's it. No complex model, no predictions, just simple logic applied consistently. Let's break down your grandma's actual trading process. Because when you really look at it, it's brilliantly simple. Step 1. She buys things she understands. She knows what Coca-Cola does. She knows what Johnson & Johnson does. She's not buying biotech startups or cryptocurrency or whatever the hot thing is. She buys boring companies that make boring products that people need. Step 2. She buys at whatever price. She doesn't wait for the perfect entry. She doesn't analyze charts. She doesn't try to time it. She just buys. If she has money and she likes the company, she buys it. That's the whole process. Step 3. She holds it forever. Through crashes, through rallies, through everything. She doesn't have a stop loss. She doesn't have a target. She just owns it now. It's hers. Step 4, she doesn't watch it. She's not checking the price. She's not stressed about daily moves. She might get a quarterly statement. She glances at it. Oh, it went up. Nice. That's the extent of her analysis. Step 5, she repeats. Next time she has money, she does it again. Same process. Buy something she understands, hold it, ignore it, repeat. That's it. That's the whole system. And it absolutely crushes most active trading strategies. Let's look at some uncomfortable data, because this is where the story gets really brutal for active traders. From 1993 to 2023, if you bought the S&P 500 and held it, you made about 10% per year on average. Just bought and forgot. Did nothing. Made 10% per year. During that same period, the average active trader made less than 3% per year. Some studies say it's even worse. Some say the average active trader loses money after fees and taxes. So the people doing nothing beat the people doing everything. The people checking their accounts once a year beat the people checking 50 times a day. The people with zero trading knowledge beat the people with trading libraries and subscription services and multiple monitors. Your grandma's stupid, simple, boring approach beats your sophisticated, analytical, active approach. Not sometimes, most of the time, almost all the time. And here's the really brutal part. The more actively you trade, the worse you do. The more you think you know, the worse your results. The more complex your system, the worse your performance. It's inverse. More effort equals worse results. More knowledge equals worse decisions. More activity equals less profit. Your grandma wins by default because she doesn't know enough to lose. Let's talk about why this happens, because it's not just luck. There are specific reasons why doing nothing works and doing everything fails. Reason 1, transaction costs. Every time you trade, you pay. Spreads, commissions, slippage, taxes if you're profitable. Your grandma trades maybe once or twice a year. You trade 50 times a month. Even if you're both making the same gross returns, your net return is getting destroyed by costs. Reason 2, emotional decisions. The more you interact with your positions, the more opportunities you have to make emotional decisions. Your grandma never experiences the panic of a 10% drawdown because she doesn't check. You experience it constantly. Every time you check, you risk doing something stupid. Reason 3, time in market. Your grandma is always in the market. She's catching every rally. You are in and out. You're on the sidelines during rallies. You're getting whipsawed. You're missing the best days because you were waiting for a better entry. Reason 4, compounding. Her positions compound for decades. Dividends get reinvested, gains build on gains. Your positions last hours or days. You're resetting constantly. You never give compounding time to work its magic. Reason 5, psychology. She's not stressed. She's not checking prices. She's not losing sleep. Her nervous system is calm. She makes decisions from clarity. You are stressed all the time. You're checking constantly. You make decisions from anxiety. The less she does, the better she does. The more you do, the worse you do. That's the pattern, and it's been proven over and over across decades of data.
Here's what happens to most traders. They start simple. Buy low, sell high. Makes sense. They try it. It works sometimes, fails sometimes. They think, I need to make this better. I need to add something. So they add an indicator, moving average crossover. Now they have 2 rules instead of 1. They try it. Works sometimes, fails sometimes. I need to make this better. I need another filter. They add RSI. Now they wait for MA crossover plus RSI oversold. They try it. Works sometimes, fails sometimes. I need to make this better. They add volume confirmation. Then they add trend filters. Then they add multiple time frame analysis. Then they add market regime filters. Then they add volatility adjustments. Now their system has 17 rules. It's complex. It's sophisticated. It looks impressive. And it works exactly the same as it did when they had 2 rules. Sometimes it wins, sometimes it loses. Nothing changed, except now they're confused and overwhelmed. Your grandma never enters this spiral. She has 1 rule: buy good companies. That's it. She can't get addicted to complexity because she doesn't understand complexity. So she stays simple, and simple works. You know what's really messed up? Most traders could improve their results by removing rules, not adding them. Strip away half their analysis, cut their indicators, simplify their process, and they do better. But they won't, because simple feels wrong. Simple feels like you're not doing enough. Simple feels like giving up. So they keep adding complexity that makes them feel smart, but makes them poorer. Let me show you what grandma-style trading actually looks like when applied to active trading, because you don't have to buy and hold for 30 years to use her principles. Principle 1. Buy things that are obviously going up. Don't try to predict turns. Don't try to catch bottoms. Just buy stuff that's clearly in an uptrend. Your grandma doesn't buy stocks that are crashing. She buys stocks that have been good for years. Do the same on your time frame. Principle 2. Hold until it's obviously done. Don't exit because you're up 2%. Don't take profit because you're nervous. Hold until the trend clearly breaks, until it's obvious it's over. Your grandma holds for years. You can hold for weeks or months on your time frame. Principle 3. Don't overthink the entry. If it's going up and you want to be in, just get in. Don't wait for the perfect pullback. Don't wait for all your indicators to line up. Just buy it. Your grandma doesn't agonize over entries. Neither should you. Principle 4. Ignore the noise. Stop checking every 5 minutes. Stop caring about daily moves. Your grandma gets quarterly statements. You can check daily or weekly, but stop obsessing over every tick. Principle 5. Keep it stupid simple. If you can't explain your strategy to a child, it's too complex. I buy strong stocks and hold them. That's a strategy. I wait for the 20 EMA to cross the 50 EMA while RSI is between 40 and 60 and volume is above the 20-day average. And That's not a strategy. That's confusion. This is grandma-style active trading. It's boring. It's simple. It works. Let's talk about what overthinking actually looks like in trading, because you're probably doing this right now without realizing it. You see a setup, clean trend, clear entry point, good risk reward. But instead of just taking it, you start thinking, well, we're near the 200-day MA, and there's resistance from 2 months ago around here, and the VIX is elevated, and it's Wednesday, and Wednesdays have historically been choppy for this stock, and earnings are 3 weeks away, and the last time we had this pattern, it faked out. So you don't take it. You overthought yourself out of a good trade. The setup was clean, but you knew too much. You saw too many reasons to hesitate, so you passed. The trade works. It runs exactly as you expected, and you're sitting there kicking yourself for being too smart for your own good. Your grandma sees a good company. She buys it. She doesn't know about the 200-day MA. She doesn't know about the resistance. She doesn't know about the VIX. She just knows it's a good company. So she buys it, and she wins. This happens constantly to smart traders. They overthink themselves out of good trades and into bad ones. They see complexity where there's simplicity. They find reasons to hesitate when they should act, and reasons to act when they should hesitate. Your intelligence is working against you. Here's another way intelligence sabotages you. It creates sophisticated FOMO. Regular FOMO is obvious. You see something going up, you want in, you chase it. You know you shouldn't, but you do it anyway. Sophisticated FOMO is different. You see something going up, your analysis tells you it's overbought, your indicators say wait, your system says no entry, but you're smart enough to build a justification. Well, this could be the start of a major breakout. The momentum is clearly strong. If I wait for my normal entry, I'll miss the whole move. I should just take a small position now and add if it pulls back. That sounds rational. That sounds smart. That sounds like good risk management. But it's just FOMO dressed up in intelligent language. You're chasing, you're violating your system, but because you can articulate a smart-sounding reason, you convince yourself it's okay. Your grandma doesn't have this problem. She's not smart enough to justify bad decisions. If her simple rule says don't buy, she doesn't buy. She can't talk herself into it because she doesn't have the vocabulary. Your intelligence gives you the tools to rationalize anything, and that's dangerous. There's actual research on this. Simple trading systems outperform complex ones. Not always, not in backtests, but in real trading, over time, simple beats complex. Why? Because simple systems are easier to follow. You can't misinterpret a simple rule. You can't overthink a simple decision. You can't find loopholes in simplicity. Complex systems give you wiggle room. Well, technically the MA did cross, but it was right at the close and the candle wasn't that strong, so maybe I should wait for confirmation. Now you're interpreting. Now you're thinking. Now you're second-guessing. Simple systems don't allow this. Price above MA, I buy. Price below MA, I sell. No interpretation needed. No thinking required. Just execution. Your grandma's system is the simplest possible. Good company? Buy. Hold forever. Can't get simpler. Can't misinterpret. Can't overthink. Just do it. And that simplicity is why it works. Let me tell you about some traders who learned this lesson the hard way. There was this guy, PhD in mathematics, brilliant, built a trading system with machine learning, statistical models, the works, spent 2 years developing it, lost money for 18 months straight. Know what he did that finally worked? He stripped everything away, went back to absolute basics, bought stocks above their 200-day moving average, sold when they went below. That's it. Started making money consistently. All that intelligence, all that sophistication, all that complexity, and what worked was something a grandma could understand. Or there's this professional options trader I know, used to run complex multi-leg strategies, iron condors, butterflies, calendars, made his brain hurt thinking about all the Greeks, stressed all the time, barely profitable. Now, he sells puts on stocks he wants to own. That's his whole strategy. If they get put to him, he holds them, grandma style. Makes more money, sleeps better, less stress. The pattern repeats. Complexity feels smart.
Simplicity feels dumb, but simplicity wins. Let me tell you about something most retail traders don't think about. You're competing against algorithms, against institutional traders with research teams, against hedge funds with proprietary data. You think you're going to out-analyze them? You think your technical analysis on TradingView is better than their quantitative models? You think your chart reading is more sophisticated than their machine learning? You can't beat them at complexity. You can't beat them at speed. You can't beat them at information. But you know what you can do? You can be simple. You can be patient. You can hold through volatility they can't stomach because they're managing other people's money. You can ignore noise they have to react to. You can wait while they're forced to trade. Your edge? Not being smarter, being simpler. All right, let's get practical. How do you actually apply grandma wisdom to active trading? Rule 1. One strategy. That's it. Pick one approach that makes sense to you. Trend following, breakouts, whatever. 1. Master it. Stop looking for something better. Rule 2. Maximum 3 rules for entries. If you need more than 3 conditions to take a trade, it's too complex. Grandma has 1 rule. You can have 3. That's your limit. Rule 3. Hold longer than feels comfortable. If you're swing trading, hold for weeks, not days. If you're day trading, hold for hours, not minutes. Let your winners actually run. Grandma holds for decades. You can handle a few weeks. Rule 4. Check your positions less frequently. If you're swing trading, check once a day. That's it. If you're position trading, check once a week. Stop obsessing. Grandma checks quarterly. You can handle daily. Rule 5. If you can't explain it to a child, don't trade it. Seriously, if your strategy requires 20 minutes to explain, it's too complex. I buy strong stocks and hold them. That's a strategy. This is how you trade like grandma, without actually being grandma.
It's okay to be simple. It's okay to have a boring strategy. It's okay to not use every indicator on your platform. It's okay to not understand every nuance of market structure. Your grandma doesn't know any of that stuff, and she's beating you. Stop trying to prove how smart you are with your trading. Stop trying to build the perfect system. Stop trying to optimize every detail. Just do the simple thing consistently. Buy good stuff. Hold it. Don't overthink. Repeat. That's it. That's the whole game. Everything else is just your intelligence getting in the way. Here's the final truth. Trading success doesn't come from knowing more. It comes from doing less. It doesn't come from being smarter. It comes from being simpler. It doesn't come from complex analysis. It comes from basic principles applied consistently. Your grandma accidentally discovered the secret to investing. Buy good things and leave them alone. And that secret works whether you're holding for 30 years or 30 days. The time frame changes, the principle doesn't. The traders making real money, the ones who've been doing this for decades, they all figured this out. They started complex, they ended simple. They stripped away everything that didn't matter. They focused on the basics. They traded like grandmas. Not because they're not smart, because they're smart enough to know that simple works and complex doesn't. You can keep doing what you're doing, keep adding indicators, keep building complex systems, keep overthinking every trade, keep trying to be smarter than the market. Or you can do what grandma does. Keep it simple, buy good stuff, hold it, ignore the noise, make money. Your choice, but the data is pretty clear on which approach actually works. Maybe it's time to trade like your grandma.